the gilt market is a very important part of this, because it's through the gilt market that the government issues this debt. And if this gilt market doesn't function, the whole system collapses. So you can understand why it's so important. Friday, September 30th, 2022, Mandrake 64, home of alternative economics and contrarian views. Today we're going to look at how the system in the UK, the Bank of England, the financial system is not out of the woods yet. We're going to look at the gilt market, the government bond market, which is the most important market really for this whole fiat currency system, for the Bank of England, which has been around since 1694. And we're going to look a little deeper into the mechanism and why, in my opinion, you need to ignore all the politics, because that's just a distraction, and you need to keep a focus on the Mandrake Mechanism of central banking. Before I start, I like to say that there are a lot of bots out there. They haven't been around for a while now, for the last few days, but they take my thumbnail, they impersonate me, they give out WhatsApp numbers, they give out Telegram. They say, go to my Telegram channel, as if it was me. I never do that, so ignore them. And there's a lot of bots as well, cryptocurrency bots as well. I try to delete them as well, saying how they made $30,000 in a week, and to go and talk to this person. So yeah, ignore those bots. So back to the current crisis. And yes, Bank of England intervened a few days ago. They announced they're going to do 13 days of QE, 5 billion each day, to flatten the yield curve. Reminds us of flattening, what curve 1 or 2 years ago. And why flatten the yield curve? Well, because they're losing control of longer term bond yields, which are very important for pension funds. Pension funds were almost collapsing, so they had to intervene. And the market looks fine now because yields have come down, but I think it's very superficial. And we'll go through that right now. I saw an interesting article yesterday that scrolled through from Reuters. This article is from yesterday around 1 in the afternoon, London time. It says, UK bond liquidity barely improves after BOE intervention, says ING. Who's ING? Well, it's a big Dutch bank. They have a presence in the city. So let's go through this. The spread between bid and ask prices on British bonds, reflecting the ease of trading and such, that was only slightly tighter on Thursday than at its peak before the Bank of England intervention to calm markets. Data from ING Bank citing TradeWeb showed. So yeah, on Wednesday morning, the bid and offer spread was huge. This suggests conditions in Britain's government bond market remain tough after the rout triggered last Friday, after last Friday's mini budget and its unfunded tax cuts. I'll come to that in a minute, that comment. The Bank of England said on Wednesday it would buy some £65 billion of long-dated bonds to calm markets. That announcement stoked further volatility, prompting a huge rally on Wednesday that saw the 30-year bond yields fall 100 basis points. That's huge in one day. It went from above 5%. As I was making my video Wednesday morning, it was 5.13. I remember talking to you about it. And then in the afternoon, it dropped below 4. That's a huge move. The average of bid and ask spreads on 2, 5, 10, and 30-year gilts was 6.225 basis points on Thursday, according to ING, down marginally from a peak of 6.4 basis points seen on Tuesday before the BOE intervened Tuesday's peak was the highest on record in ING's data set going back to 2017. The spread was just 2.15 basis points last Thursday, the day before the government's mini budget. The data showed it had averaged around 1.4 basis points since the start of the year until the announcement. Widening bid and ask spreads mean the difference between the price sellers are asking and buyers are willing to pay is increasing, making it harder and more costly for investors to trade in and out of positions. Such wide spreads on government bonds are particularly troubling to investors, given they are meant to be among the safest and most liquid assets in the financial system. Let's just keep going here. In past episodes of severe market volatility, investors have also said that sellers end up accepting lower prices than indicated on trading platforms, meaning liquidity could be poorer than such figures show. 30-year bonds stabilized after a 100 basis point rally. They call it a rally because the prices rallied and the yields dropped 100 basis points yesterday. So I think we can say that the aspect of the intervention has worked, but restoring market functioning is a different matter altogether, said Antoine Bouvet, senior rate strategist at ING. We'll have to wait longer for confidence to return and extend their support beyond October 14th, even if they don't end up buying much. So here we have a guy who is a specialist in this market saying they probably have to extend this program to flatten the yield curve past October 14th. He said, referring to the date that the BOE has said its bond buying auctions will end. Gilt yields rose moderately on Thursday. 30-year gilt yields, which surged to a 20-year high above 5% on Wednesday, were up 3 basis points at 396. And I noticed as well the short end, like let's say 2-5 years, they went up quite substantially yesterday. So they might be able to keep the longer end low, the yields, but they might have a problem with the shorter and midterm yields. So the comment they made there about the mini budget, yes, that's part of the politics. There's a lot of debate. I see people are saying, it's the IMF or the Labour Party. They don't want tax cuts, but I think it's a combination of many things. It's not just the mini budget. It's also that package to backstop energy prices or utility prices at an average of £2,500. That's an open-ended liability for the government. I think that was even more serious. And what the mini budget did was just a little. It was the snowflake that triggered the avalanche, but it was developing. It was much more than that. And as I've said in my previous videos, this is beyond left and right. This is just the whole mentality that we've had for over 100 years, that the government has to be there to help everyone, and I think that's what's happening. And now to the Bank of England. I talked about the Mandrake Mechanism, and what is that? Well, it's very simple, and most people they're shocked when they hear this because they think that banking is complicated. They can't understand it. But I will quote you William Patterson. He was one of the founders of the Bank of England in 1694, and this is what he said. And I quote, "The bank hath benefit of interest on all monies which it creates out of nothing." So that's basically it, this Mandrake Mechanism. And the way they keep this going is that they create, the bankers and the politicians, the head of state, they create and they go along with crises, be it pandemics, be it wars, be it whatever. And what these crises do, they scare the public into accepting a solution from these people. And usually a solution costs a lot of money. Prior to the central bank, this was more difficult to do because the monarch could not get financing from a central bank. So what happened in 1694, the Bank of England got a royal charter, and it started the process of building this national debt and the national debt basically keeps the system going. And the people who pay for it, of course, are us, the taxpayers. Taxes were a very important part of this, and I highly recommend this book here, which I've gone through. These are the letters of William Cobbit, who was an MP in the early 1800s. He was even in jail, put in prison for a year or two, accused of libel by King George III. And yes, he was in Newgate prison for 2 years. And he wrote about the Bank of England, and he wrote a series of letters while he was in prison about the whole mechanism, and I highly recommend it. It's Paper Against Gold, containing the history and mystery of the Bank of England, the funds, the debt, the lowering and the rising of the value of paper money. And he talks about that without the Bank of England being founded, the national debt that was starting to be created, actually in 1692, I think it was about 2 million. It wouldn't have been able to continue because prior to the Bank of England, if the monarch couldn't pay the debt, they were in trouble. But the Bank of England gave them like a protection. And the Bank of England as well created this fractional reserve system where they could basically borrow 10 pounds by only having 1 pound in the bank of real gold or silver. And that's the Mandrake Mechanism. And the gilt market is a very important part of this because it's through the gilt market that the government issues this debt. And if this gilt market doesn't function, the whole system collapses. So you can understand why it's so important. And there's another guy who wrote about this, but this was a little later. This was like in 1820 or 1810, I think. This guy here, Captain A.H.M. Ramsey, he was an MP in the 40s. Late 30s, early 40s, and he wasn't one of the MPs who was put in prison during World War II, especially when Churchill became prime minister, and he wrote this book, The Nameless War. I have to say, I agree with a lot of what he says, but some of his conclusions I don't agree with. He takes things very personally in terms of ethnic groups. And I have to disagree with him on that because it doesn't matter what ethnic or group or religion you are. This mechanism is implemented by all kinds of people, but he makes some very good points here about the fractional reserve system and how it impoverishes the nation. And also he talks about the party system, how that's a distraction. And this is about the Glorious Revolution, and then it says here, the real objective of the Glorious Revolution was achieved a few years later in 1694, when the royal consent was given for the setting up of the Bank of England, the institution of the national debt. This charter handed over to an anonymous committee the royal prerogative of minting money. There you go. Out of thin air. Minting money out of thin air. And this is the example he gives here. Gold was soon to become the basis of loans, 10 times the size of the amount deposited, fractional reserve. In other words, 100 pounds in gold would be legal security for 1,000 pounds of loan at 3%. Therefore, £100 in gold could earn £30 interest annually with no more trouble to the lender than keeping a few ledger entries. And this is where he compares, he shows how parasitical this system is. He says the owner of £100 of land, however, still must work every hour of daylight in order to make perhaps 4%. The end of the process must only be a matter of time. The moneylenders must become millionaires. Those who own and work the land, the Englishman and the Scotsman, must be ruined. So there's another part here that talks about how this was quite dangerous what they did, founding the Bank of England and instituting this fractional reserve money lending system. He says the danger was that the members of the new joint parliament, and that's England and Scotland, because Scotland was unified into the UK around that time, would sooner or later, in the spirit of their ancestors, challenge this state of affairs. And here's the interesting part I was talking to you about, political division. To provide against this, therefore, the party system was now brought into being, frustrating true national reaction and enabling wire pullers to divide and rule, using their newly established financial power to ensure that their own men and that their own policies should secure the limelight, and sufficient support from their newspapers, pamphlets, and banking accounts to carry the day. So there you go. That's the BBC, the mainstream media, and left and right. So with that, let's look at where the markets are this morning. It's 8:30 a.m. London time. So spot gold is trading up about $10 at $16.71. High's been $74.50. Low has been $58. Silver is up 32 cents, trading at $19.12. High's been $19.20 and the low $18.76. So it's up 1.6%. The Dow is up 150 points. The futures up 0.5%. NASDAQ 100 futures up about 0.8 at 11,265. And the S&P futures up 0.75% at 3667. The FTSE 100 index is up 56 points at 6918. And now to the currencies. Yes, and the pound has rebounded very sharply, but that's all part of the volatility. And I see a lot of people out there in social media saying, "Oh, why doesn't the media report that the pound is up?" But they need to look at the bigger picture and the fact that this is not good either for the pound to be at 104 one day and at 111 the other. That's not how supposed hard currencies trade. But anyway, right now, sterling is up 0.3% at 111.50. I think we could even go up to 114. And why 114? Well, because that was the old low from March 2020. And when we broke through that level, that's when the pound really accelerated lower. So a lot of times that's what markets do. They break through these key levels. They dump or they spike higher, and then they come back to retest that. So I don't think the pound is out of the woods yet, but it is a little stronger right now. The euro is unchanged at 98.13. The dollar is down slightly versus the yen at 144.36. Dollar is up 0.2% versus the Swiss franc, 97.72. And the dollar is unchanged versus the yuan at 709, but I've noticed it's dropped quite a bit. Yesterday it was 721 when I spoke to you. And I've noticed as well that yesterday the ruble was quite strong. I think the dollar dropped to like 56. So let's see where we are right now. Well, the dollar's rebounded a little bit, is at 58, is up about 4%, but the ruble remains relatively strong. To the other currencies, we got the Aussie dollar unchanged, 64.97, and the dollar is up slightly versus the Canadian dollar, 136.87, and the Kiwi dollar is down 0.25% at 57.13. To the general commodities, WTI crude is up 0.8%, 81.64. Brent is up 0.8 as well at 87.94. High-grade copper is up 1% at 344. U.S. nat gas is up 0.2% at 696. The Dutch nat gas futures is down about 1% at 202. And let's finish off with the bond market. Let's have a look at the Gilt market. The 2-year Gilt is down about 17 basis points. So yeah, a lot of volatility there still. It's at 418. The 10-year is down 6 at 408. And the 30-year is now down 3 at 393. And as I said earlier, we need to keep an eye on this. The gems or the gilt-edged market makers, the specialists, are saying that the market is still very illiquid. U.S. Treasuries, the 10-year yield is down 2.5 basis points at 372. Yes, we touched 4% earlier this week when gilts were melting down, and it kind of rejected that level. You have to wonder whether there was some intervention there as well, and maybe the Fed not wanting the 10-year to go above 4%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great rest of the day and a great weekend. Take care. Bye.